We are dealing with a handover from China that's actually quite interesting this morning. Some disappointment in various corners of the market last week and in recent weeks with a lack of policy action, or maybe policy action not living up to expectation from, for example, the plenary. And today we get a cut in one of the rates from the PBOC. What's happening here?
Yeah, so they're certainly making up for that disappointment this week by having the cut of the reverse repo rate earlier this week, and now this cut of this medium-term rate. So, I mean, really what's kind of going on now is that China has for a long time been dealing with a slowing economy and trying to figure out ways to boost that economy while not overly weakening its currency. The yuan is already trading near a pretty weak level. So really it comes down to a matter of timing about how you then go about supporting your economy. Cuts are obviously supportive, but they are also something that would traditionally weaken the currency. But I was really interested in looking at the response of the currency today. The yuan is actually stronger today. And the reason for this is that they have been very strategic with their timing. They have waited for a moment where actually the other sort of currents within the currency market are quite supportive of the yuan. So, for example, we're seeing the yen having a huge bout of strength. That's helping pull the yuan along with it, and also encouraging people to unwind carry trades, which have also, as well as being funded in the yen, have been funded in the yuan. So that's been supportive of the Chinese currency. And then also you're seeing a relatively flat period for the US dollar. Now, given the Chinese authorities are very cognizant of some of the criticism of their weaker exchange rate that we've seen, particularly from the US and from former President Donald Trump, that's something that they obviously want to kind of try and keep relatively stable. So I think that's kind of why we've been sort of seeing this development coming out this week.
So you mentioned the yen as part of the partial Asia story. Let's talk more about that, because we are also seeing headlines come out of Japan that they proposed a record minimum pay hike at a time when they're talking about increasing the minimum wage, but also potentially hikes on the table with a 152 handle on dollar yen. What is going on at the BOJ?
Yeah, it's going to be very interesting. Their meeting is obviously next Wednesday, and there feels like there's quite a lot of trading minutes between now and next Wednesday. So the question I'm looking for is really sort of what extent do we see this current rally in the yen stretch and even overextend? I was looking at some of the technical indicators, relative strength indicators, something I like to look at, and we are, like, I think the most oversold since about 2020 when you look at the dollar-yen pair. So if we're thinking about how much more the yen can rally, it's going to be interesting to see whether it can push through this 152 to 151.50 level. There's a lot of support there. There's a lot of kind of interesting resistance levels that will help provide some kind of ballast to the dollar-yen pair on that kind of journey. But really the key is going to be what the Bank of Japan does next week. Do they hike?
Just briefly then, Rachel, yields are lower. You've got some former Fed officials calling for rate cuts sooner than previously expected. What's moving markets in Treasuries?
Yeah, so I think it's exactly that. We had William Dudley coming out yesterday and saying that he thinks it's time to cut. We've had Goldman Sachs saying July would be a lovely time to cut. The market thinks September is still the likely scenario, but that's really been moving Treasury yields around in recent days.